What you are looking at is just a small sliver, or a lone warehouse aisle within a bonded non-bank silver bullion depository, one that is likely located on the east coast of the United States of America, perhaps still operating within the COMEX Fractional Reserve Silver Warehouse Network. This image was taken in the year 1995. In it, one can eyeball just under about 2 million ounces of silver. The price of silver that year fluctuated from a low of around $4.30 to a high of 6 fiat Fed notes and 10 Cupro nickel cents. Within this high-ceiling silver storage facility, there were some 60,000 industrial-sized 1,000 troy-ounce silver bullion bars, all held at the time by Wilmington Trust, still one of the largest holders of fiduciary assets in the United States and in the world today. At that time, in the year 1995, their 60 million ounces of silver was just over 1/5 of the silver bullion underlying the COMEX Fractional Reserve Silver Price Discovery derivative market. Within 3 to 4 years following when this image was taken, about 100 times what you see here, some 200 million ounces of physical silver, got withdrawn from the COMEX silver market. About 2/3 of that 200 million ounces withdrawn likely ended up with Warren Buffett and Berkshire Hathaway's 1997 to 2006 silver bullion bet. In the show notes link below, I'm going to of course leave you with some backlinks documenting my claims here. But for the main focus of this video this week, we're going to answer the question any silver bullion buyer with common sense should ask themselves before going long silver bullion. How much silver is there? And no, we're not talking phony derivatives. We're doing physical estimations here. We're also going to most importantly put that answer into both past and potential future silver bullion supply, price discovery, and bid price context. Hello out there, this is James Anderson with SDBullion.com for our 5th precious metals market update. The silver spot price backed up and closed this week at $16.64 per troy ounce. The spot gold price fell a few bucks, finishing the week at 1,462 fiat Fed notes per troy ounce, remaining and closing flat for the week. The platinum spot price is just under 900 per troy ounce, consistently and yet again achieving a new record palladium price this week, closing above 1,900 per troy ounce. The palladium physical shortage continues to ramp its price higher. The gold-silver ratio rose a couple of ounces of the week. It now takes around 87 ounces of silver to acquire 1 ounce of gold. Quick update on the New York Fed repo loan program ongoing. Now around 80 days in operation since middle September of this year, the short-term overnight loans with durations lasting up to 42 days has in aggregate closed in on the 5 trillion fiat Federal Reserve note notional loans to date mark. Financial tweet of the week goes to Jim Bianco of Bianco Research, illustrating what reported amounts of repo loan market support have stuck to the Federal Reserve's balance sheet thus far. Back to our main topic at hand. How much silver is there in the world? After the Industrial Revolution, with increased outputs via agricultural production, energy use, advances in medicine, indoor plumbing, and combustion engines use in mining, the percentage growth in human population was ironically mirrored by world silver supply growth. Gold mining output also had a similar but even slightly larger explosion in growth too, as opposed to silver. For the last 80 years, we humans have mined around 8 parts of silver to 1 part gold. Over the last decade plus, while both investing and working with this industry, I've done this How Much Silver Is There in the World research and article deep dive multiple times. Beginning this 21st century, there was a very small amount of transparently held silver bullion within depositories around the world. That near 20 years ago fact has since been rumored onwards to somehow mean that today there is somehow less 0.999 fine silver bullion above ground in the world than there is gold bullion. Based on many sources of reliable data, that is not true. There's conservatively about 2.5 billion ounces of gold bullion and 4 billion ounces of silver bullion in the world today in the form of coins and bars collectively. We'll put these 2 bullion piles into total global asset and financial world context shortly. But no, when compared to gold bullion, there is more than double that amount of physical gold spread throughout the world too in jewelry, artifacts, and within gold industrial applications. Considering total silver bullion piles, there is easily 5 to perhaps even 10 times the amount of silver spread amongst thousands of electronic and industrial applications we use day to day. As well, there are tens of billions of ounces silver spread amongst the world's collective silver jewelry, silverware, and artifact piles. The impetus for my covering this topic today is that a well-known and respected industry colleague of mine, Jan Nieuwenhuis, also known for writing under the moniker Koos Jansen for many years, recently published an article for Vioma Gold entitled How Much Silver is Above Ground. Reading through Jan's recent work, I was pleased to see the accuracy of my above-ground silver numbers was corroborating many handfuls of hours I spent researching the matter myself. There are also a few additive points I would like to make in this video for silver bullion context. In his article, Jan states the United States Geological Survey estimates that all-time silver mined throughout the year 2017 is just under 56 billion ounces. The USGS, in an email correspondence reported by Jan, went on to claim 7 to 10% of all-time silver has been lost to landfills. There was no corroborating backlink nor data associated with that historical silver loss assertion, and I find it kind of dubious. I'm not sure any entity, other than mere straight-up omniscience, might confidently know how much silver we humans have lost to landfills and not recycled. If you simply think about the rampant global consumerism of the past 5+ decades, I'm not confident anyone knows how much trace silver we have thrown out and not recycled. The more important point about the context of how much silver is in the world estimation is this. It really doesn't matter how much industrial silver we have pilfered away because recycling was not worth the monetary return. When it finally becomes worthwhile to recycle silver, it will become worthwhile to do so globally. The world silver refining industry does not have the capacity to meet another major global silver melt akin to the one that happened in the late 70s and early 1980s. If you've been paying attention to the silver bullion and silver refining industries over the last few years, you're probably well aware of the consolidations and bankruptcies that have occurred. Once LBMA-approved gold and silver bullion bar refineries all of a sudden quickly became bankrupt, either alleged and or prosecuted blood gold silver refiners. Names such as Ohio Precious Metals, Elemental, Republic Metals, all once large silver gold refineries, they're now gone. The largest remaining LBMA-approved gold-silver refinery in North America recently got called out in a New York Times expose showed on the FX television channel. The TV show asserts that North America's largest gold and silver refinery has been selling alleged blood gold illegally wildcat mined in countries around the Amazon rainforest, such as Colombia, Venezuela, Brazil, Peru, and Ecuador. Multinational corporations named in this blood gold expose include Apple, Ford, Samsung, and Tiffany's jewelry. You know, the overpriced one with the blue box. So we can add up all the world's sterling silverware and pure silver jewelry piles or other uneasily exchangeable silver combined at the moment. What I'm trying to get across to you is that what's past this prelude. And just quickly walking down memory lane tells silver bullion buyers interested in selling into the silver mania that's to come, they should always consider the form of the silver bullion they stack. This short clip of Chris Martinson, speaking with longtime precious metals dealer Robert Misch, they speak about what a gold bubble mania looks like. It was recorded back in early 2012, and Misch talks about silver and the discounts people were forced to take on sterling silver bids due to silver refinery back orders and delays in the late 70s and early 1980s. Have a listen.
You mentioned refinery problems. What's a refinery problem?
A refinery problem is where dealer buys the scrap gold and scrap silver, and his refiner can't get it processed for several weeks or months, and that squeezes his cash flow, so he has to pay less and less to the public.
So if I walk in with a bag of junk silver, it's 90% silver, it's always been trading well, but if we're in a real heyday, your refiner says I'm backed up 11 weeks, I can take that in 11 weeks. Meanwhile, prices are gyrating. You're going to look at me and say what? I'm
going to say, Mr. Martinson, I wish you'd come in here with pure tradable silver, something that's exchange ready, industrially ready, or what it may be, but I think it might be something else. The marketplace's choice for medium of exchange. If you have silver in any other form, if it's in odd, as in coins, broken spoons and knives, or whatever, and I have to have it refined in order to get it back in a util marketable form, it's going to suffer a discount. And that discount is going to be greater the longer it takes to turn that around.
So anything that has to cycle through refinery has that refinery risk. What was the discount that got applied, say, at its most maximum in the 1980?
In 1980, when we were about 8 weeks backlogged, and not everyone even had a refiner relationship and had to rely on other dealers who did, it got to about 30% discount for having the wrong form of silver versus the right form.
Right. So you could still move it, but you would take a hit on it.
Yes.
Relative to
so
spot.
there's always a market. The market incorporates cash flow, risk, and time.
Mm-hmm.
As promised, here we will finally put these monetary bullion piles into total global asset and financial world context. Here again, not shown to scale, we have former Federal Reserve Governor John Exeter's updated upside-down pyramid showing which asset class people flock to during bankruptcies, financial spillover events, and crises. Physical gold bullion makes up the financial foundation valued currently at just under $4 trillion in notional value. Even if we add in all the gold jewelry and industrial gold globally, we have a total value of around $9 trillion currently. But this visual capitalist illustration from a few years ago is now near current financial market scale, and we're going to bring the 4 billion ounces of silver bullion into financial world context here. This dot represents 100 billion in silver bullion. That assumes by the time we make it to $25 an ounce silver, we still have around 4 billion ounces of 0.99 fine silver among global investors. The silver industry is real tiny. It's completely dwarfed by even the largest multinational corporations. Annual GDPs, top 100 or more billionaire lists, the Federal Reserve's now over 4 trillion Fed note balance sheet, hard total M1 fiat cash notes circulating across the globe, physical gold's values globally, various combined stock markets around the world, M2 and M3 monetary supplies floating around globally, the 255 trillion in hard global debt levels, total global real estate valuations, and then derivative bets and hedges that have been made between large financial institutions. And estimates of those numbers depend anywhere from 500 trillion up to 1.2 quadrillion. You get the idea. Comparing the world's silver bullion pile, especially to the amounts of illusory fiat currencies masquerading as bona fide money, this is where the fear and or greed-induced mania for silver can get silly. When real capital flows start flowing and pouring into gold, precious metals, and especially the silver market, the monetary and industrial rush to own physical silver should give these 4 billion ounces of silver bullion stout and rising bid price leverage. That's all for this week. Click our show note link below for more. Hey, thanks for tuning in. If you liked it, be sure to like the video. If you haven't subscribed to our channel, do that. And also hit the alert button so you don't miss these market updates as they come along. Give me a comment below. Let us know what you think and what you'd like to see more of. Have a great weekend, everyone. Thanks for tuning in.